you live now to Perth. This is where the Prime Minister Scott Morrison is speaking, delivering his first major policy speech to the Chamber of Commerce and Industry in WA. It's all about getting the economy going. Let's have a listen in.
To get ahead and make a better life for themselves and their families. Australians rightly see themselves as being in charge of their own lives and their own destinies. And that's why I've exhorted my team to respect the outcome of the election by governing humbly, understanding that the election result was not about us, but it was about those quiet Australians and their honest and decent aspirations. Our job is to ensure that our decisions can simply make their lives, the lives of Australians, that little bit easier. Australians also said they were no longer prepared to accept any claim that governments can solve all their problems just by giving them more of your own money or saddling future generations with a mountain of debt. Australians live within their means and they simply expect governments to do the same and just get on with it and get the job done. The election also confirmed our view that Australians appreciate that the services they rely on, hospitals, schools, the NDIS, depend fundamentally on ensuring we have a strong economy, not higher taxes. Without a stronger economy, all else is in vain. Jobs, funding for schools, hospital, combating youth suicide, closing the gap with Indigenous Australians, the National Disability Insurance Scheme. Without a strong economy, these are just wishes. So today, at the start of this new term, and I'm particularly pleased to be starting it here today, here in Western Australia, the great entrepreneurial state, I want to speak to you about getting on with this job of building our economy to secure your future. The Australian economy has shown remarkable resilience over a long period of time. We're on track to achieve 28 years of uninterrupted economic growth, and Australia's real GDP has grown faster than any G7 economy over that period. The median age of Australians is around 38 years today, and those Australians have not known a recession over their entire adult lives. At 2.9%, jobs growth has been stronger than any of the G7 countries over the past year. The vast majority of the nearly 1,000 jobs a day created over that period, over the last 12 months, have been full-time positions. Almost three-quarters of Australians today, aged 15 to 64, have a job, which is an all-time record in this country. Female workforce participation is also at a record high, and so is the participation of those aged 65 and over. So the great Australian jobs machine continues to whir away from coast to coast. A great strength, but there's still so much more to do, which is why we pledge to create another 1.25 million jobs over the next 5 years, which is central, the object of our economic plan. The 2019-20 budget will be in surplus. We are literally now only days away from being in a surplus year. It's been a long road back, 12 long years in fact, but we're almost there. Another great foundational strength for our economy, and our AAA credit rating remains in place, despite significant challenges that we've had to face. And we're one of only 10 nations in the world to achieve that outcome from all the key agencies. That said, we do face significant challenges and headwinds. Now, that's not news to anyone in this room, and it's certainly not news to Josh Frydenberg and I. Josh and I have been making this point for some time. The Treasurer's reports from his recent trip to the G20 Finance Ministers meeting in Japan, as well as to London and Berlin and Washington, confirm that international risks have increased over the first half of the year. Protectionist sentiment and trade conflict, especially between China and the United States, is weighing heavily on global confidence in the economy, and here in Australia as well. This uncertainty extends also to what's occurring with Brexit, and that's not helping, although the impact of that particular issue in Australia is quite muted. And the unfolding of all of these events are essentially own goals for the global economy, because otherwise the broader consensus points to the fundamentals of the global economy actually being relatively sound in a post-GFC environment. As a trading nation, this week's G20 summit on the weekend will be an important opportunity for us to seek for the world's leading economies to map out the way forward from here, working closely with the G20. We're also close to the peak of the global cycle on interest rates, with pressure on European Central Bank and the United States Federal Reserve to lower rates to support their economies. And of course, our Reserve Bank has made that decision most recently. In the domestic economy, there are challenges. We've seen the effects of prolonged drought and floods on regional communities, with farm GDP declining by 6.8% over the past year. There's been what I describe as a necessary moderation, particularly in the eastern states, in the housing market, and that has contributed to softer consumer spending. Removing Labor's threat of massive changes to housing taxation has thankfully erased some of the gloominess in the sector, which, combined with interest rate cuts, prudential changes and other forthcoming first home loan deposit schemes, they are providing some support to that market to stabilise it. Credit tightening post the Banking Royal Commission has also dimmed economic activity, especially for small businesses seeking access to finance and for major housing development projects. Now, the latest national accounts showed quarterly growth at 0.4%, and while this was a modest increase, it was an increase in growth compared with the previous quarter, and it also indicates, though, subdued activity in parts of the economy, in particular the housing sector, business investment and household consumption. So it's also fair to say, I think, in that context, so we've looked over the last 6 to 12 months, that politics has played a role, with the election weighing on confidence up until a few weeks ago. And the bounce back that we saw following the election in business confidence, as measured by the NAB monthly business survey, showed the largest monthly increase since the change of government back in 2013. And so our job now, post-election, with these matters being sorted by the Australian people, is very clear, and that is to get Australians back and off the sidelines and onto that field again. The Reserve Bank's recent cut in the cash rate will put more money in the hands of Australians, but as the Governor has stated, we must also drive growth in the longer term. The key goal of these policies is job creation. It's always been about jobs for us. Our economy has displayed an enormous capacity to absorb record levels of employment. The more jobs that are created, the more Australians keep entering the workforce. Increasing participation rates, also at record levels, forcing economists to now postulate that full employment, which was previously thought to be at an unemployment rate about 5%, is now closer to 4.5%. So that means to see larger increases in incomes and in wages and in earnings, we need to see even more jobs created to reduce unemployment to these levels to get the necessary attention in the court. And the only way to create more jobs, and we've got a bit of a history in doing this and some form, is to increase the levels of investment in our economy. Job-creating investments that unlock productivity gains and enable Australians to earn more. What does productivity mean? It means that Australians can earn more. Now, this relies on businesses having confidence, capability and incentives to back themselves in. And so today I want to focus on three elements of our plan to achieve this. First, how we will get things moving by lowering taxes, sharpening the incentives to work and invest and get infrastructure projects happening on the ground now. Secondly, provoking the animal spirits in our economy by removing regulatory and bureaucratic barriers to businesses investing and creating more jobs. And thirdly, boosting the economy's long-term growth potential by unlocking greater economic dynamism and productivity by lifting our skills capabilities and driving uptake and adoption of new digital technologies to promote innovation and competition, especially through our financial system. So let's talk about tax relief first. Australians must keep more of what they earn. And at the last election, that's what the Australian people have demanded. Next week in Parliament, we will submit our full tax plan to the Parliament just as we presented it to the people of Australia and as it was endorsed in full by the people of Australia. Labor's high taxing agenda has now been rejected by the people at 2 successive elections. Labor's primary vote at the last election, over a month ago, was their lowest in 100 years. 100 years. Even lower than when they lost government in 2013, 1996 and 1975. If Labor can't hear a 1 in 100 year message, if Labor cannot hear a 1 in 100 year message that Australians want to keep more of what they earn by endorsing our full tax plan as we present it to the Australian people, then they just don't get it. Labor's internal conniptions about supporting the government's plan to simply let Australians keep more of what they earn exposes Labor's deep mistrust of Australians doing what's best for them with their own money. Because Labor always thinks that they know best, and Australians said at the last election they disagreed. So the fact Labor are having to be dragged kicking and screaming to this, putting up one excuse and one ruse after another, shows they don't understand that when you find yourselves in a hole, you should just stop digging. Our proposed tax relief plan doesn't just have a strong political mandate, it has a compelling policy rationale. The first stage of our tax changes will support economic growth by putting money in people's pockets so that they can use it to boost consumption. And that's worth at least 2 25 basis point rate cuts. This will include immediate tax relief to low and middle income earners after they lodge their 2018-19 tax returns. And for middle income earners, this works out to be over $1,000 for singles, and it's obviously double that for dual income families in that range. More than 10 million Australians, taxpayers, will benefit, and right here in Western Australia, around 1.25 million taxpayers will benefit from our plan that will support the Western Australian economy. The first stage is part of a longer-term plan to simplify our tax system and sharpen the incentives to work and invest for the future. It's an aspirational tax plan. It's backing aspiration. While stage 1 of our tax plan will fast-track and boost tax relief for low and middle income earners and support the economy, stages 2 and 3 are more fundamental long-term changes to our personal tax system. We're simplifying the system, more closely aligning the middle tax bracket with corporate tax rates and improving work incentives by tackling the silent thief of bracket creep. And as the PFO statement confirmed prior to the election, the measures are fully incorporated into the medium-term projections, which are also maintaining all spending projections on current profiles, which is another excuse Labor have been seeking to highlight for not passing these cuts. There is no basis to that excuse at all. The expenditure plans are set out in the medium-term projections. So it baffles me why Labor can readily sign up to spending schemes that run out for decades and even in perpetuity, but they cannot do the same thing to let Australians simply keep more of their own money. Under our changes from 24-25, 94% of Australians will pay a maximum marginal tax rate of no more than 30 cents in the dollar, compared to only 16% if stages 2 and 3 are not delivered. Now that's real tax reform. That's a big change. Or to put it another way, almost 80% of hard-working Australians will keep more of what they earn following stages 2 and 3 of our tax plan. They will receive greater reward for their efforts, providing an incentive to put in the effort to get a raise or secure a promotion, to study to get that different position. Getting these incentives right in the workplace is vital to raising productivity. And we're also backing small business, as you know, by reducing their taxes, and those changes are well known. Backing in their goals and dreams for their own businesses. In our April budget, we increased the instant asset write-off threshold to $30,000 until June 30, 2020, and expanded access to the medium-sized businesses so that around 22,000 additional businesses employing almost 2 million Australian workers will now be eligible. This is in addition to fast-tracking the company tax cut for small and medium-sized businesses, and with an annual turnover of less than 50 million. While lower tax is a centrepiece of our plan for a stronger economy, contrary to much of the commentary that I just noted in passing got it wrong on another particular big issue this year, it is by no means the whole story. To get things moving, the Deputy Prime Minister, Michael McCormack, will be ensuring the government leads by example with a single-minded focus on implementing our $100 billion infrastructure investment program. Now, this program increases Commonwealth support for transport infrastructure by a third, by funding nationally significant transport projects across the country, unlocking productivity by decongesting our cities, creating jobs and supporting future population growth to make our cities more livable. The immediate focus is for Minister Tudge to work with the states on the congestion-busting urban infrastructure projects that can be readily actioned to spur growth and support local jobs and get things moving. The same will be done by the Deputy PM for regional communities through our Building Better Regions and water infrastructure projects. Here in Western Australia, we've committed more than $13.6 billion since we came to office, and we're getting on with new projects, including further upgrades to the Tonkin Highway and improvements for the Oates Street, Welshput Road and Mint Street level crossing removals as part of MetroNet. And since our re-election, I have already met with the Premiers in New South Wales and Victoria to take stock and to get a common view on project timetables and priorities, and to make sure our to-do lists are all in order. And here in Western Australia later this morning, I'll be meeting with Premier McGowan to do the same thing, and look forward to working with him on these projects. That's why infrastructure delivery will be an important item on the COAG agenda when we next meet on August. The same process is being followed for historical investments in defence capability, with more than $200 billion being invested with generational job-creating projects here in Western Australia, as well as in South Australia and in Queensland, and states all around the country. Ensuring these investments remain on schedule and that we realise the uplift in skills and technological capabilities for our defence industries will be the strong focus of our new WA Defence team, in Linda Reynolds, who's our Defence Minister, and of course Melissa Price as Defence Industry Minister based here in Western Australia. Now, to provoke much-needed animal spirits in our economy, we must also remove regulatory and bureaucratic barriers to business investing and creating more jobs. Congestion is just not about what's happening on our roads in our cities. We also need to bust regulatory congestion and remove obstacles to business investment. When we came to government in 2013, we launched the Cutting Red Tape initiative. And Christian Porter, now Attorney General, Minister for Industrial Relations, was involved in that, as was Treasurer Frydenberg in earlier roles. Now, that worked across every government department. We set ourselves the goals of reducing the burden of regulation on the economy by $1 billion each and every year. And we succeeded. Between September 2013 and December 2016, this initiative yielded red tape savings of just shy of $6 billion. Removing what governments identify, though, as excessive or outdated regulations is one thing, but whether we are really focusing on the barriers that matter to business in getting investments and projects off the ground is another. Take the WA mining industry, for example. In 1966, the late Sir Harvey Parbo took the Kambolda nickel mine near Kalgoorlie from discovery to operation in 18 months. By contrast, the Roy Hill iron ore mine took around 10 years to complete and around 4,000 approvals. Delays to the project meant delays to over 5,000 construction jobs and 2,000 ongoing jobs. Now, this is in a region where iron ore mining has been taking place for decades and is relatively low risk. Now, there is a clear need to improve approvals timeframes and reduce regulatory costs, but in many cases, regulators are making things worse. Here in WA, the Environmental Protection Authority and the uncertainty it has created over new emissions requirements for the resources sector is not good for investment. Businesses will also, I acknowledge, make valid criticisms of many Commonwealth agencies, departments and regulations. And that's why I've asked my colleague Ben Morton, my Assistant Minister, to work with me and the Treasurer, who will be the lead minister on this project, and other ministers, to tackle the full suite of barriers to investment in key industries and investments. This will be a renewed focus on regulatory reform, but from a very different perspective. Rather than setting targets for departments or government and agencies, we'll be asking the different question from the perspective of a business looking in and say to open a mine, or commercialise a new biomedical innovation, or start a home-based family business. By focusing on regulations from the viewpoint of the business, we will identify the regulations and bureaucratic processes that impose the largest costs on key sectors of the economy, where the bottlenecks are, and the biggest hurdles to letting those investments flow. So, what are the barriers? What are the blockages? What are the bottlenecks? How do we get things moving? And I want to urge business in this room and around Australia to engage with us on this process. Step one is to get a picture of the regulatory anatomies that apply to these key sectoral investments. Step two, work out what the blockages are. And step three is remove them, like cholesterol from the arteries. Now, while reducing taxes has had a major impact in the United States, and here as well, I believe, it was actually the Trump administration's commitment to cutting red tape and transforming the regulatory mindset of their federal bureaucracy that delivered their first wave of improvements in their economy. You can be assured I've begun this term by making it clear to our public service chiefs that I am expecting a new mindset when it comes to getting investments off the drawing board and on the ground. One particular area where it's essential to get regulation right is to protect investment from the impact of militant unions that would have been given a free rein under a Labor government if they were elected a few weeks ago. Ever since then, the CMFMEU, I'll try that one again, they keep changing it. Ever since then, with the CMFF, there you go. You know who I mean. You know only too well who I mean. The CFMMEU. They don't deserve an applause, I can assure you. We have seen them in full R-rated Technicolor display. It's only underlined, I think, the wisdom of the Australian people in rejecting going down that path a few weeks ago. Labor doesn't run the unions in Australia. The unions, through their money from members' indentured fees and union super funds, their numbers in the factions that run the Labor Party, and the armies that they put on the ground at election time, means that the unions, and the militant unions in particular, run modern Labor. Now, that is a very far cry from the balanced relationship of the Hawke-Keane-Kilty alliance that we saw in the past. They are a very different beast today. Our government is committed to enforcing the rule of law on Australian work sites. All Australian businesses have the right to expect that they can go about their work without being subjected to bullying and disruption. When we're back in Parliament next week, another of our priorities is to introduce laws to give greater powers to deal with registered organisations and officials who regularly break the law, prohibit officials who are not fit and proper persons from holding office, and stop the rorting of worker entitlement funds. All measures Labor resisted during our last parliamentary term. They're serious about clearing up the unions. They'll vote for these bills. In his new capacity, and I congratulate him as Minister for Industrial Relations, I've asked Christian Porter to take a fresh look at how the system is operating and where there may be impediments to shared gains for employers and employees. Any change in this area must be evidence-based, protect the rights and entitlements of workers, and have clear gains for the economy and for working Australians. It's a practical, economic process, and we look forward to working with people to that end. We would expect business organisations such as yours, and I'd be not surprised when you do, to build the evidence base for any potential changes and to bring along the full community with all of us. Now, just as our economy is growing and changing, our skills needs also need to grow and change with it. And demand for skills is shifting from manufacturing to the services sector and emerging industries like advanced manufacturing, ICT and cybersecurity. Our vocational education system needs an upgrade to ensure it remains world-class, modern and flexible. That is what business has told us. You're not getting enough people walking through your doors with the skills you need. The Joyce Review, which we commissioned prior to the election, confirms this and will now guide the changes we will seek to make during this term of Parliament as a key component of our economic plan. The review acknowledges the good work undertaken in the sector so far, but says VET needs to be adapted so it can support important and emerging industries and become a first choice for students who want to pursue technical careers. We believe that learning through a vocational education is just as valuable as a university degree. And so we want to transform the way we deliver skills, supporting employers and funding training, working closely with the states and territories. We're addressing the findings of the Joyce Review by setting up a National Skills Commission and a new National Careers Institute to give people the information they need to decide their future careers and the best pathways to get them a job. We're simplifying and targeting increases in apprenticeship incentives, and we're creating up to 80,000 additional apprentices over the next 5 years in priority skills shortages areas through a new apprenticeship scheme. And the review's recommendations are wide-ranging and responsibilities for the sector are shared. Vocational education is one of my key priorities, and I intend to make it a primary focus of our discussion with the states and territories at COAG. Now, this work will also be led by two Western Australians, Michaelia Cash as the Cabinet Minister, who's responsible, and Steve Irons as the Assistant Minister, who as a trade-qualified electrician and a small business person himself, I think is well tasked to assist Michaelia in this important job. Now, finally, for the digital economy. Digital disruption, especially in financial services, is changing the way people and governments interact. Consultancy firm McKinsey argues that digitisation contribute between 140 and 250 billion to Australia in our size of our economy by 2025, based on the current available technology alone. Now, I've appointed Senator Jane Hume as Assistant Minister to the Treasurer to support his efforts to drive the changes we're going to continue to make in this area. Our upcoming legislation to introduce open banking through a new consumer data right will give customers more control than they've ever had before over their own data and empower them to compare and switch between products and encourage competition between service providers. The consumer data right will enable customers to get assistance and tailored support by empowering them to own and share their own information as they choose, putting them in the driving seat so they can drive further innovation and competition throughout the financial industry. And while we are starting with banks, we intend to expand this choice, this data right, to multiple sectors for things like phone and internet providers or your energy bill. It will lead to better prices and more innovative products and services. Also, the new payments platform, the NPP, makes payments faster and simpler for consumers and businesses and must pave the way for further innovation in our payment system. The challenge is now to encourage economy-wide uptake. It's been in place for a little while now, but the level of uptake at this stage, I think, is underwhelming. And it's very important that we encourage more of our economy to be linked up to the new payments platform. The potential gains that are available to businesses, particularly small and family businesses, through the new payments platform and its ability to reduce payment times are immense. The impact on cash flow is extraordinary with wider economy adoption. We will also continue with the establishment of mandatory comprehensive credit reporting system that will also increase competition and complement the other changes I've referred to. With greater information, new entrants and innovative entrants and smaller lenders, including innovative fintech firms, will be encouraged to compete for small business and retail customers. The mutual sector, including customer-owned banks and cooperatives, will also be able to compete better with the legislation that lifted restrictions on their ability to raise capital being passed just before Parliament rose. More broadly, our government will continue to advocate strongly for a rules-based and open global trading environment that supports digital trade, builds trust and confidence in the online environment and reduces barriers. Right now, we were seeking to conclude a new benchmark agreement on digital trade with Singapore, and to do that by the end of this year. And it's something I recently discussed with Prime Minister Lee when I met him just a few weeks ago in Singapore. We also kick-started negotiations on the e-commerce rules in the WTO, which is another important area of reform that must take place within the WTO. And at the upcoming G20 summit this weekend, I'll take further opportunities to advocate for initiatives like these, which are clear for us to be able to do business in this new modern world while ensuring trust in the online environment, including consumer privacy. And the digital economy will be a key feature and initiative of the Japanese presidency of the G20 under Prime Minister Abe, and I'm looking forward to supporting his initiatives. There are, of course, many other components of our plan. I've only touched on 4 of them here today. And our plan to build our economy into the future so that we don't have time to go into those many other elements today. Expanding our export markets, lifting the share of our two-way trade covered by trade agreements to more than 90% by 2022, keeping government spending and taxes under control, keeping the budget in surplus, eliminating net debt within the decade, continue to support greater investment in innovation and new technology, both in the public and private spheres, reducing energy costs through market reforms, ending and continuing to foster increased investment in both renewable and reliable energy infrastructure, supporting our drought and flood-affected agricultural sectors and communities, and deliver on the national water grid. All things we talked about during the election campaign and in the budget. And we will return to these on other occasions when I look forward to returning. But for now, we will just keep getting on with the job that millions of Australians have entrusted us to do as we support them realise their goals and their aspirations. And there is no more aspirational group of Australians than those who live here in Western Australia. Thank you very much for your attention.